when you're looking at a pattern, okay, and you see you have a perfect reversal, and let's just run. Let me run the scan one more time here, where here's the CAD on a 15-minute basis. Okay, so then I need to filter out that chart, and because I did it in all symbols, and you're usually going to get a ton of matches when you're scanning for everything, and you can go back to the software and be selective and scan specific patterns. But this is the realistic situation when you're dealing with harmonic patterns. Again, is okay. Look at this.
That is perfect.
There's a potential reversal zone right here.
Right.
So no matter how far that trend has persisted, if we're looking at this, look at that zone. There's your ABCD, there's your 786, there's your 127 BC. Those are 3 mandatory minimums. Okay, and
right.
When we're looking at that, so if you look at that trade at a minimum, okay, here is the price bar. That's called the terminal price bar, and I teach that in the seminars of where the pattern has reversed. Okay, so if we're executing here at 98.70 or 98.65 at or just below the zone, okay, look at that reversal. Okay, so that gives you a nice move, but you still need to actively manage it. And again, like I'm saying, if this breaks your simple uptrend line, okay, you better be trailing your stops. And if you're not out by this bar or even the violation of that low, okay, you need to study trade management, look at my trade management webinar, or just make that personal assessment of understanding. You need to understand that not only do we identify the pattern and where to get in, but we better have some kind of idea of where to get out. And so when we're looking at that, that's the power of harmonic patterns. Now, let's just again look really quickly at the relative position of this pattern. Okay, here's the pattern itself. No matter what's happened to the left of the chart, we're just focused in relation to where the combination, the ratio alignments tell us where to get in. It gives us a great short-term bounce exactly at the completion of the numbers. But let's look. Again, let's look at this. Okay, that Gartley, you can barely see it, but that Gartley formed after a couple hundred pip move. Okay, but it doesn't matter. We're focused on the ratio alignment. But then now look at it. It's now, okay, it gave you that nice pop, and that's why we need to actively manage these type of situations. But then if you look at it in pulling to the right side of the chart after that reversal has completed, that shows you that harmonic patterns are temporary signals. They're not home run situations. And if you looked at that pattern, there's 2 ways to look at it. You could say, well, that pattern gave you a reversal, but it failed. Not really.
Right.
It didn't fail because it gave you a 100 pip move. So no matter what happens after that reversal has violated that reversal trend line, and there's other management strategies that I teach in the execution, the trade management webinars of how to capitalize on these situations. That's the key. I mean, one, identifying the structures properly, and that's why the Harmonic Analyzer is the best harmonic trading software, period, because none of the other programs get the alignments right. Okay, and then having the proper expectation and understanding of how to handle the trade. That's the other side of it that most people miss.
Right. There's 2 things I need to ask before you go. The break-even point. Now,